Good morning. Give me a sec here, guys. One moment. All right. So finally, we got a little bit of selling here. We got our warning shot a few days ago, and well, it's the internals which we covered at the time gave us a heads up, but this wide range bar was the beginning of the tell. Um, and yesterday, my voice is distant. I don't know why. Dan, let's check the microphone connection here. Microphone. I don't know why, Dan. The microphone is on Yeti. Nothing I can do about it now. Anyway. Yeah, they say it's okay. Anyway, so yesterday in MT Live, and we sent out the replay yesterday. If you missed it, or even if you watched it, it was a good MT Live, and just to review. And one of the things that we talked about was wide range bars was the main topic. Excuse my throat here. And wide range bars igniting versus wide range bars ending. And so here we had an igniter, which was within the base and coming off the bottom of the base and pushing up. And you remember back then we talked about the bullish consolidation that was happening over here in that bottoming tail bar. And over here we get a range expansion wide range bar. And that typically happens near the end of a move that says momentum is likely to stall. It doesn't mean markets are going to come, down real hard. This is coming down rather hard and now into support. And yesterday we reviewed the possibility of this being a head and shoulders top. Now that we know it is, and it broke down here. And not all head and shoulders tops react this way. Some head and shoulders tops, the prices advance in a more, let's say, less enthusiastic way. Maybe they do this and chop around. And so the idea with that type of a pattern is that they're creating all of these support points along the way for prices to stop, whereas where prices go like this and then vertically move up and they create what we call a price void, right? So price voids are created through momentum moves and then time. And then once they enter the void, the possibility of happening is exactly like this, a little mini crash to the downside. Now it's, almost there, and it's pretty much meet its first destination point, this little congestion area, which are these overlapping bars right over here on the daily chart. So one of the things you want to be careful of here is getting short right here at the open, thinking, oh, the markets are crashing. A lot of novice traders will be looking at this downtrend and seeing, oh, the markets are down, or whatever, almost 1,000 points, yada yada yada. And this a lot of times will just break right at the open to the downside and flip right back up again. And that's only a short-term type of a move. But this is likely to continue to move down eventually. Maybe down here, I think this 3,000 would be an obvious resting point for buyers to step up. These overlapping bars, the 200 there, and so on. And maybe as it comes down, the 50 might kind of work its way up. So we'll see. And it's just a thought right now that would be a place for prices to come down to. And just looking at the futures, having started a move here to pull back to here, I think would be pretty normal. It wouldn't violate the trend. So we shall see. And one sec, guys. I see for some reason my screen is blinking, and I don't know why it's doing that. Move this down a little bit. Something going on there. Anyway, I don't think there's anything I can do about it at the moment. One second. I don't know if that will help it. Anyway. Okay, so let's take a look at other markets. So we looked at ES. Spiders are down here at 310. So they're gapping all the way down here to support. And now what do we have here? Right? Those of you that maybe read some technical analysis books, this is called a bearish island reversal. And when you have like one bar, that's a little bit bearish. When you've got 4 bars up there with a gap up and a gap down, Alex is a tropical island. That's good. And so we've got this island that's left up there, and now prices are gapping down here to this support area. So we're a little bit below it. So we'll see if it can hold this area. It would make sense for it to try to, just coming on big gap like that. I think at a minimum, big gap days like this tend to continue in the direction of the gap. There'll be an attempt to rally, but they typically, most of the time, because the move is so big right at the open and the size of this gap, it has a tendency to be a deadish kind of a day unless it spends several hours going sideways. And if it does that in the morning where it just chops around, lunchtime just might be the place to be, where a move begins if it just chops sideways, into that time frame. Because, there, like, the thinking would be that it held the support. We would then see on smaller time frames like the 5 attempts to rally that possibly failed, and maybe after several hours of attempting to move the markets higher and not happening, buyers would give it up, and they couldn't rally it. So something that I'll be keeping an eye on at that time. And let's take a look at the NASDAQ futures. And you can see a big reversal bar there. This was a big reversal bar too. And so the red bars, for the most part, were ignored on the way up. So this is going to be a tell here about this very strong uptrend. To say, well, all the other times these red bars didn't go very far. Right, little pullback, almost nothing, bottoming tail bar. And does it this time retrace deep? And while this isn't a pivot right there, it is multiple days of going sideways and then a breakout. So this is going to be a place where, if it doesn't hold there, if it starts to break, at that point we start thinking, oh, there's a bigger correction, and how far will it go? Well, we'll see what the information says at that time. But looking at this weekly time frame, we look at multiple time frames to say, well, what's the probability of something like this happening? Well, the move started here and it retraced more than 100%. Some will say, whoa, new all-time highs. It took out the old high. That's bullish. Well, not after running the race from here to here. So an MTS concept is that after 100% retracement, momentum is likely to stall. And so at this point, that's all that's happening is momentum is stalling. We'll see what this looks like at the end of the week, whether it's still a topping tail or whether it's a red topping tail, which means it's closing below the opening price. You don't need to see that. But if this turns red, where the close gets down below the opening down here, and especially if it starts to, move deeper into the prior week's range. And this is where retracements come into the analysis as to, well, you can just look on this bar. Well, it was all the way up here and it retraced all the way back to the bottom of the bar. Well, that's bearish. but it's still in an uptrend. How far does it retrace into the bar that preceded it? And so on. And then, of course, we look at pivots, and you see over here, there was no pivot. So this is part of a tell of risk increasing, is that when it came off of the low, you got a little pullback and a pivot, a pullback and a pivot, a pullback and a pivot, consolidation, right? A little drop, pivot. No pivot. Why is there no pivot? Because the momentum picks up and there is no pullback, which means after rallying as much as it did, that it's sort of like looking at a wide range bar, is that the momentum picks up. The perception of traders, institutions, is that there is little to no risk. So we don't need to buy pullbacks. We don't need to buy breakouts. We can just buy because it's going to go up forever. Kind of like real estate years ago, right? It's just going to go up forever. So you don't worry about anything. It'll just refinance it. It'll be higher prices. You'll pull out cash. And it's a similar thing. We're just looking at, human nature in this instance here, where climbing the wall of worry turns into no worries. Greed starts to increase and up and up and up. And then it begins to fall and there's nothing there. I know it's blinking, Paul. I don't know why it's blinking. I don't know if it's something to do with Zoom or YouTube, why it's blinking like that. So, is it blinking in the chat room, Dan? It is. I don't know why it's blinking. Anyway, we'll look into that. You're dizzy now? Stop smoking that stuff, Gusta. I know you're not flying now, but anyway. All right. So we just look to the left here, some consolidation here. We'll just see when it gets down there, it falls. So, the NASDAQ, which has been holding up so well and leading the way with the FANG stocks, just notice the high bar up here, big wide range bar, the widest bar in the move. So warning. We'll see how much this comes in. Okay, so now we got 242-ish, right, gapping down below there and leaving a little 1 bar island reversal. We'll see how far this goes as well. So we got corrections all over the place here that are beginning. Russell, below 140, pretty nice size gap. That's going to leave a big hole there. So we got some congestion right there at 137, and right around here, I think buyers will show up there. We'll just see what the reaction is there. We'll give it a few minutes. Futures, right on the rising 20, and got that little congestion. So maybe a little bit more to the downside. Right? So you see the trend is down. It's holding here. So similar to that trade we did yesterday in the Russell off of the 1-minute chart, I'd be looking to do a similar type of trade here. Meaning if the Russell was to fall down into these bottoming tail bars, that the location, right, what I explained yesterday was looking at a 1-minute chart isn't something that we want to do on all the time and trade from. And one of the things that happened was it did stabilize prior to that, and then it retested and took out the low on the 5-minute. And then on the 1-minute, we utilized that as an entry point, and we got in right as it began to form the bottoming tail bar on the 5. But similarly, there's a concept of, hey, if it comes down here, then we can go to a smaller time frame and look for a pattern. Not far, I guess, Q social, whatever. You guys are talking about something else. All right. Dow, 3,000 put spread one day. I don't know, McGraw. 3,000. If there's juice at 3,000, or you're going to go below it, I think that would work. Sure. I think so. I mean, that would be a giant move. Markets are down here at 3,100. Right. 310 down here. Those overlapping bars from 630. 6.3, I should say. And yeah, that would be way far away if there was actually juice, and maybe there will be at the open because of the size of the gap. That's an idea. All right. Dow on support, saying there's our 900-point drop, 1,000-point drop, what have you, coming right into these areas of prior support there. So you just, again, just tell you every day, you don't need trend lines, fib lines, just look to the left, right? There's the congestion. So what do you need? Just getting out stupid tools like this. Oh, I can draw it and, start putting all these stupid lines on and overlapping them and whatever to try and find support and resistance. It's really, comical, but that's what I'm not telling you I sidestepped that ridiculous analysis many years ago. It's just not necessary. Bonds moving up here makes sense. Big rally coming up into resistance there. And oil, right, pulling back here a little bit makes sense too. Running up, we covered the fact that it was coming into the gap fill. Ichikumi cloud is cloudy today. I'm sure it is. The Ichikumi cloud aficionados are scrambling to say, why didn't one of those lines hold? Or maybe they're changing the color of the clouds to make them stronger. Whatever. Anyway, gold coming up to the top of the range. Figuring the markets continue to fall, this probably will break out. And, earlier in the week, or maybe it was even yesterday, I talked about where this bar was starting, that this should become a red bar ignored. And if it can hold up there, that is supportive of this, breaking out. If you look at the monthly, which we looked at some time ago, was that bullish multi-year rounding bottom and then breakout, suggesting it could go back up to 2,000. All right. What is your recommendation for long open positions? Jose is asking me. I don't know, Jose. It would depend on positions. It would depend on, where prices are at. If they're gapping down to support, they'd wait. What we recommend to subscribers is if you get caught in a position like this, is to remove your stop and then wait at least 5 to 30 minutes to see if markets stabilize. And as I pointed out, markets are on support, so they just may stabilize and you could get out at a better price if they rally up. Just based on what's happening here, you can see some things are getting clobbered pretty sharply, like the airlines. This is down at around $26, gapping all the way down here to support. Common sense would tell me, if I bought this and it was gapping down here, I wouldn't be a seller at the open, that's for sure. So that's the best advice I could give. If you bought on a pattern that was, say, up here and it's gapping down to a red bar, odds are it's going to go a lot lower. And at that point, you should be thinking about getting out under a 5-minute low, or maybe buying a put option or what have you. Do something to protect yourself. Right. Art saying, good morning, Greg, Dan. The pivot high-low indicator comes with E-signal. No, Art. It may have something in there. That's something I had created in there many years ago. They may have something there now, but if you're an E-signal user, I'm happy to share it with you. You can email me, greg@mastertrader.com. Okay. All right, Dan, all yours.
All right, thank you. Yeah, so I hope everyone sees why we've been, very cautious, waiting for the shoe to drop. And yesterday morning, I kept us out of longs. I made it really clear after the Fed. I usually wait until, at least, the first hour the next day to see what the true move is. And it just another example, it just blows my mind. The CNBC headline is, the market's down on, I'm paraphrasing, on bearish outlook from the Fed. And I'm thinking, you stupid, you fill in the blank. Did it really change 900 points overnight? It was already out. The dude was talking at 2:30. It's just, it just shakes my head. But anyway, I kept us very light. We only have 2 open positions in the weekly options trader. They're both bear call credit spreads, one in Boeing, getting a nice gap down. I moved the stop to the 30-minute high. I sent that out on Telegram, and also on Dunking. We have a call spread. This is a candidate. Maybe we'll do another one for next week. Gapping under here. We talked about this stock in MT Live yesterday in we talked about trading WRBs. We only have 3 open positions in our swing letter, so very light indeed. I wish we actually, I was gonna short Boeing today under yesterday's low, and just trying to do trade review. I'm thinking, we had the patterns there, the internals are there. I wish we bought a put into the close. I know things can be hectic the first hour after FOMC, as I just said, but that would have been a prudent speculation there. Hey, Alex, flights, I saw what you typed. Something about canceling flights. Who did that? Yeah, I knew there had to be some news because there was. No, Stephen, we got out of W yesterday. Oh, that was a joke. Or yeah, tropical island. Yeah, I'm going to use that. I told you Gustav came up with Medusa head and shoulders, and now we have a tropical island, tropical bear island reversal. All right, let me get through these. So this was one. I made an exception yesterday. I said it looks fantastic. It's one of those where we were willing to take the risk, overnight risk of FOMC. There's no volume pre-market. I can't tell where it's opening, but high likelihood it's going to be gapping down with the broader market. But that was a beautiful trade. Daily, weekly, 15-minute chart. So I don't regret that at all. Microsoft, we have a covered call, even with the gap down. We're short the 190 calls. So as long as it closes above 190 by tomorrow, Mark, 30-minute low if it gaps, down. Bear it on what? If you're talking about BA, you can't, there's no volume. I don't know. Unless there's volume pre-market, just you have no idea where it's going to open. So anyway, I moved the stop to 30-minute low. But, covered call is we're capping our gains, and that would be our max gain at the 190. And then we have Tyson. Now, this one was not acting right yesterday. We also have a covered call. So I move stop pretty much 30-minute low on everything. Microsoft, Tyson, Dunking. No, Dunking I didn't move yet, but Boeing, 30-minute high, because the calls were getting some stabilization pre-market here. So yeah, for the morning, and we've had a fluid sell-off pre-market. So my bias is for day trading the morning is higher, is trading a bounce. We got 5 minutes to go. Look, you had a little W bottom right there on a 5-minute chart. So if this, we got 5 minutes to go. If this can now curl in a little bit and give us a higher low, that would be a fantastic long entry. So yeah, for balance, I got a long bias. For swing trading though, you've been hearing me say for the last 6 weeks. I don't understand this rally. It's, we're still going to trade the charts, and now on CNBC, that's now the talk is, oh, the disconnect between the economy and the stock market. Well, I've been saying that for weeks. So if you're long-term trading, I surely would be getting out at these levels myself, but that's me. Airlines, cruise ships, restaurants getting whacked, these things that went way up. Tabo, I don't know what the news was, but you were telling me last night airlines are getting whacked, and they were, but they're getting whacked even worse pre-market. I mean, look at this gap down, 360. They're just getting whacked. Play, one of these Dave and Busters. Well, it's recovering here pre-market. Now, if that can go sideways, that's a reverse head and shoulders. NK gapping up $8, but no pattern. Talerd had earnings, no pattern. There's Craig, your mic is on. OXM, we'll come back to it. Uber was in the news. California, socialist government over there, they're classifying Uber and Lyft drivers as employees. And, in my opinion, that's socialism. They're forcing the companies to take care of them, because the more the company takes care of them, the less the government has to. That's my take on it. And then secondly, Uber lost out. Uber was trying to buy Grub, in a foreign company. Grub is doing the merger. Let's see. YouTube's asking about a Google put spread, and any thoughts on MSI? Google put spread. 1443. No. Well, let me look at it. I don't know. I mean, it's now in a trading range. Look at this reverse head and shoulders right here. We were 2 days ago we were trading all these FANG stocks on a 15-minute chart. But this is a head and shoulders. Left shoulder, head, right shoulder, breaking out, neckline. That was a beautiful trade. So would I sell a put spread on this now? I have no idea. But as of now, I would say no. With a bearish gap in the stock, bearish gap in the market, this is going to be a jolt. We need to wait 30, 60 minutes and see what's going on. Let's see, MSI, if it's gapping down here to 144, folks, yesterday morning, all morning long, people were wanting to trade, go long, and I was keeping our folks out of bad trades, even though the best trade yesterday was NVIDIA. It looked fantastic on the gap and go. NVIDIA was the best looking long I found yesterday morning. But my point is, unless something's set up beautifully, I'm not playing in this mess right now. Trio, it looks like a penny stock. Look at that. Pre-market, it went over 16 bucks. Holy cow. Look at that 15-minute chart. If that tail's real, 5-minute chart, 2-minute, yeah, I don't know, but I'm not messing with it. CMG, this was a call spread candidate yesterday, M-top. This is a bull sandwich on the weekly. So this looks great let's put this in our short watch. Has a huge price void. Cannot believe this. So rioting and coronavirus causes a burrito stand to double. to all-time highs in a few months. I mean, what, maybe the business school of Wharton teaches that? That's good for burrito sales, riots, and Corona. I don't get that at all. So let's keep an yeah, Jeff. Yeah, we sent out an alert saying we were bailing on it because we just didn't want, it had a little retracement after entering, and we were able to get out at a scratch. So we got out. But if you're still in it, it's holding better than many other things. Ba. Okay, yeah, we're in Ba. Yeah, it's a bearish gap.